Hello everyone and welcome to the channel. Today we look at one company that has quietly become the thermostat of the global AI mania, Nvidia. Not because people love GPUs, but because the entire AI equals guaranteed future riches story is hanging on one ticker. Nvidia is about to report quarterly results again after briefly flirting with a 5 trillion valuation and then losing around 10% from its last peak. Wall Street is nervous, not because they suddenly discovered risk, but because the narrative and the numbers are starting to diverge. Let's unpack why this particular earnings report is a no-win scenario for the broader AI trade. Right now, Nvidia is not just a chip company, it's the primary barometer for the entire AI will save everything thesis. Other tech giants report strong numbers, but for AI, Nvidia is the key indicator. Its guidance sets the tone for hundreds of other tickers that have attached AI to their pitch decks like a magic amulet. Option markets are pricing in potential moves in the hundreds of billions of dollars in market cap on earnings. That's not investing, that's a leveraged referendum on a narrative. When a single stock carries that much macro psychology on its back, you don't have a healthy market. You have a cult with a Bloomberg terminal. The amusing part is this: even a good report is dangerous. If Nvidia beats expectations and raises guidance aggressively, that can fuel a new wave of concern that everyone is overinvesting in AI infrastructure, burning cash on hardware at a pace that business models cannot justify. If Nvidia only slightly raises outlook or signals some normalization of growth, markets can read it as the peak is in and start deflating the AI bubble faster than PR teams can invent new buzzwords. So you get a paradox: too strong, they're overspending. This is unsustainable. Too weak. Growth is slowing. The dream is fading. Structurally, this is what happens when pricing is based not on cash flows, but on the assumption that AI is a one-way escalator to the sky. While retail and late-arriving institutions are still hypnotized by the AI story, some large players are doing something very unpoetic: selling. A hedge fund linked to Peter Thiel exits its Nvidia position around $100 million. SoftBank unloads a much larger stake in the several billion range, preferring to fund its own AI bets rather than hold exposure through Nvidia. This is not a moral judgment, it's just behavior. Early winners crystallize profits. They leave the AI forever dream to those who show up late and explain to each other on social media why this time is different. You don't need conspiracy theories, you just need to remember that the first ones into a crowded trade rarely stay to switch off the lights. Structurally, three problems are obvious. One, extreme concentration of expectations. Nvidia is treated as both the engine and the thermometer of the AI cycle. That amplifies volatility and makes the whole system fragile. Two, reflexivity. High share price, cheap capital, more capex into AI, more orders for GPUs, higher share price. This works beautifully until demand normalizes or margins compress. Then the same loop works in reverse. 3. Psychological fatigue. For almost 2 years, the market has been told that AI will fix productivity, profits, and maybe human stupidity. At some point, investors will want to see sustainable business models, not just more GPU rack photos and partnership announcements. When you see central bankers and regulators starting to warn about stretched equity valuations and AI-driven bubbles, it's not because they suddenly care about you. It's because they see systemic risk building under the hype layer. For the AI trade, Nvidia's next reports are less about one quarter's earnings and more about whether the system can transition from hype to normal industrial logic. Capex must eventually match real paying demand. Margins on AI services will be competed down. Hardware cycles will slow, like they always do. For regular investors, the point is simple. When a single stock becomes the symbol of a technological religion, risk is not high volatility. Risk is waking up one day and discovering that the story is still beautiful, but the multiples are not. The AI wave as a technology will clearly continue. The AI wave as an eternal risk-free trade will not. Thank you for watching. Take care of yourselves and your loved ones and try to remember, slogans don't power grids, systems do.